Party like it's 1999, dude. All jokes aside, what has been going on with stock options, valuations, and stocks like GameStop with enormous short squeezes threatening to bankrupt many hedge funds that were short stocks like GameStop on fundamentals is insane. I think now we are way worse than the 1999-2000 technology bubble. And I think things are so bad in the real economy and the levels of speculation are so insanely high with paper and options and derivatives, and options or derivatives on stocks, and all this retail money which doesn't know any fundamentals is gambling on stock options. And as you can see there on the chart on your screen, retail call option buying is at an all-time high. So the speculative fervor is insane. So we have high frequency trading algorithms which force trends up or force trends down. So if there's a short squeeze, the high frequency trading algorithms will force it even higher. And if a stock's already crashing, they'll force it even lower. And we've been having that. We've had volatility in stocks, although the VIX has not woken up again yet, but in the not too distant future, it probably will if this is going to continue, unless Congress is quick to send out those next round of $1,400 debit cards or checks or however they're going to send them out. The $600 debit cards actually look like scams. They actually sent me and my family members some. They don't look real. My parents were telling me they think that they look fake. Anyways, I think what is going on from a financial history perspective is actually worse than the technology bubble, and I'm hearing this from a lot of longtime hedge fund managers. It's actually closer to Weimar Republic and what happened there, how bad the real economy was, and how desperate people were to speculate on foreign currencies and stocks prior to the October 1929 crash back then in Weimar. But now people are trying to replace their income or get any type of income at all. And then you have the flames of speculation and how easy it is to make money in stocks just by looking at a chart, not knowing any fundamentals, because fundamentals apparently don't matter anymore. We have gold stocks, some of them selling at 140 times sales. Some of these companies like GameStop have a $25 billion market cap. I believe Peloton has a market cap now higher than the entire fitness industry. And profits don't matter either. So not only do valuations and fundamentals don't matter, apparently profits don't matter either. And that is how insane things are getting in terms of valuations, in terms of speculation. And I don't think Congress is going to do very much because they're too busy trying to make money off insider trading themselves. But the hedge fund guys, the hedge fund lawyers, they do not want Main Street making money because now you have teenagers or you have Instagram models that have made money doing online sex work or in-person sex work, sugar daddy stuff or whatever, and then they're taking those profits and they're reinvesting those into buying call options and trading stocks and cryptocurrencies. And I know this is true because I've had conversations with Instagram models about it, and I've seen them post and brag about the profits they're making. So you have Instagram, TikTok, Discord, Reddit. I think the Wall Street Bets message board, they're talking about banning it on Reddit and on Discord, which is ridiculous. So it is insane what is happening right now. But if you've studied financial history, this is actually not surprising. As things get worse and worse in the real economy, people become more and more desperate to find income. And things are going to get worse, unfortunately, because the politicians and the bureaucrats don't seem to be interested in allowing the real economy to open. So let me just wrap up this short little video. I think that things are now far worse in terms of valuations and speculation and retail call option buying and short squeezes now, literally where Robinhood traders or other traders are trying to buy shares of bankrupt companies where the equity 6 months from now might be zero. And they're causing enormous short squeezes of hedge funds that were shorting these stocks based on fundamentals. And it's just getting insane. And that's why you have this crazy volatility in GameStop and other stocks, where the fundamentals in a lot of these companies are absolutely horrible. And yet the share price, the charts, are going parabolic. And in that upward price momentum in the share price attracts even more momentum traders, even more high frequency traders, and it's just gonna get crazier and crazier. So we don't really have markets anymore. Everything is just so distorted. We have manipulations, and it's a casino gambling hall where Wall Street and DC and the regulators and the lawyers of the hedge funds and the investment banks and private equity and the large corporations just try to change the rules all the time for the people on Main Street to screw us over. So Main Street was trying to buy up a lot of these shares of companies and cause short squeezes, and I suspect, unfortunately, that the rules are going to change. So I think things are worse than the 1999 technology bubble because there are a lot more people, retail traders, involved with call options and doing short squeezes now. And I think things from a financial history perspective are actually closer to Weimar and how bad the real economy was in Weimar Republic, how corrupt the government was, how desperate the people were, all the infighting, people stopped trusting the government, and not too long after the speculation started, the October 1929 stock market crash occurred, wiping people out. So we'll see what happens. Hopefully people are not buying these call options on margin. Hopefully people are not trading on margin. The extra leverage will do even more damage. People can end up owing even more than they gambled.